Good afternoon, everybody, and welcome to Chaikin Analytics presentation of Boost Trading Profits Like a Pro, what institutions know that you don't. My name is Josh, and I am your presenter today. A couple things before we get started. Nothing I say should be taken as individualized advice to buy or sell any security. We're going to go over a bunch of examples today. I got a lot of charts I want to show you, a lot of stocks I want to go through. I want to show you an impressive, repeatable process that I think can really help you. But again, it's educational. If you have any questions, I love questions. I want to answer all of your questions. I may not be able to get to them all. I apologize in advance, but I'm going to try and answer all of the questions. I got a lot of stuff I want to get through. Put together a presentation. I want to try and get through it all in reasonable time for everybody tonight. But please, if you have questions, use the Zoom Q&A window. It should be accessible at the bottom of your screen. All right. Lastly, this is being recorded, and a copy will be sent to all registrants tomorrow. So you'll get a copy tomorrow if you registered for this. All right. Now, let's get into it. First, let's talk a little bit about who I am. My name's Josh, and I am the head of option strategies here at Chaikin Analytics. If there are any members who are listening and they trade options, they've probably interacted with me, maybe answered some questions for them. Maybe they hung out on my option ideas session that I hold twice a week. But I'm the head of option strategies here. I also work on the client success team, and my job here is to help Chaikin Analytics subscribers find basically the best trades and investments, the ones that have high probabilities of success with low risk managed strategies. Now, why am I qualified to do that? How did I even become an option expert? Well, I was blessed. I was lucky to be mentored and coached by floor traders and market makers at the Chicago Board of Options Exchange. I spent years learning from the folks who were institutional traders, hedge fund managers. And with that, I then turned around and I started paying it forward, is kind of how I looked at it. I was really blessed to be able to be mentored by these really impressive people, and I get to work with them still. I get to work with Mark Chaikin. That guy's a Wall Street legend. His indicators, if you download any charting platform, his indicators are in, I get to work with him. And I've been blessed. So I've been turning it around and trying to mentor others. And for a while, I focused on all markets. Here at Chaikin Analytics, I really focus on equities and options for everybody. I'm a firm believer that anybody can outperform the market, but it takes a few things. You just can't dive in and do it. You just can't. It takes some things. And I was lucky to be shown what it takes by real pros. And so today, what I plan on doing is talking to you the way I would talk to my own brother about what I learned from those pros and what they know that most people don't, and what they do that most people just don't do. So, unfortunately, a lot of the people that I coach, when they get into stocks, and let's just talk about the market for a second. When you get into stocks, it's unlike any other profession, and it's a profession. You're up against Wall Street professionals. You get up against people who do this for a living. If there are any lawyers on here, any attorneys, you in the market is like facing me pro se. Lawyers will get that. I don't know how many else will, right? But you can't just become a doctor. You can't just become an attorney. You can't just become a CPA. You can't just become these highly specialized professions by going to Google or anywhere online. You have to be trained. The thing with the market is, though, that you don't. The market's so accessible, anybody can get into it. But the problem is that there's no real training for it. It's because it's so accessible. So people naturally search out for help. This is what I did. I don't want anybody to think that I haven't gone through. Everything I'm telling you tonight is an experience I've had. And so I can relate. I understand. I went to the Motley Fool. I went to Google. I went to Investopedia. I was so thirsty to learn and understand. It's why I feel so blessed to be able to take out my cell phone and text a former market maker or floor trader from the options exchange. Hey, swap ideas. I was looking at this. What do you think, mentor? But this is how most people learn it, and you're at a real disadvantage that way. You're at a real disadvantage, and it leads to a whole lot of challenges so many people are facing that I face myself. I'm gonna list a few of these off. In fact, if you would, in the Q&A window, if any of the things I list off resonate with you, if these are challenges that you've had, type it in, all right? Please. So what challenges have I had? Well, when to get in. Let's start with that. When to get out. When to exit. That one's even tougher. One of my old bosses had a saying. He said, people in the stock market are like kids at the pool. They're happy to dive right in. They never want to get out. And I find that very true. All right. Information overload. How about that? How much is so much information out there? It's one day you're looking at something and all the metrics look great. The next day you turn around, it doesn't look good. You go to one site and the PE looks amazing, but then you look at the free cash flow and you're like, I don't know if that looks good. First off, how many of you are looking at all this and even trying to decipher it all? It's hard. How do you know what a good PE even is? Right? Like a price to earnings ratio for a utility company is going to be different than that for a technology company, and they're going to be measured against their peers differently. Remember, that's how Wall Street thinks. They don't just say, well, 20 PE is high and 10 PE is low, because it matters on the company and what the market is. How about just uncertainty, like fear? You're afraid to hit that buy button because you think the moment you hit it, it's going to go down. Really what that is confidence. It's a lack of confidence. Faced that many times before. These are all things I think people face. And it all comes, I think, from the same basic differences between the way that people act in the market and the way that pros are taught to go about it. And we trade a lot on emotion. So much of retail trading is done on emotion. How many of you out there have had a good winning trade and it's going up, and you think to yourself, yeah, all right, this is good. I like this. I'm going to give it if it goes one more dollar, then I'll get out. And then what happens? It goes against you and you're at break even. And then you think, all right, well, I'll get out here. And then it takes off again, right? And you're like, man, why'd I do that? Or even worse, it just goes against you and you've just had this great winning trade turn into a losing trade, or this great investment that's been so good for you for so long. Now it starts to turn around and you're like, what the heck? Right? These are all very, very, very common things that I've dealt with myself. Some of you may have watched Sandy Chaikin do one of these webinars. I stole the slide right out of her webinar deck. I think she has a great repeatable process. We're going to talk a little bit about not precisely what she does. We're going to talk about what I do, but they're very similar. It comes from the same foundation. Now, Sandy happens to have a Wall Street legend as a husband. Not everybody, I don't have that. Not everybody has that ability. But what everybody does have is access to professional tools. In this day and age, there's a lot that's opened up for people. All of these challenges lead to real underperformance. This week marks the 10-year anniversary of the S&P lows in 2009, right? And I'm on Twitter and a bunch of these articles come up and they're throwbacks to 10 years ago. And I was reading one from Bob Pisani. I don't know if you know who that is. He's a CNBC reporter from 10 years ago, talking about how the outflows at the lows were record shattering. People, they're emotional, and when they don't have something to rely on to keep them steady during the storm, that's what happens. And so the difference, what what pros have. Let's pivot to what pros do. They have a repeatable rules-based process. They do the same thing over and over and over and over and over again. The exact same thing. And they have a directional edge. Listen, they have proprietary tools. They have some really smart quantitative people, people that look at large data and are able to crunch it. We have a few of those ourselves. If you go to the back corner of our office, we have people that I think NASA would be jealous to get their hands on. They are bright, and they put together institutional strategies, frankly, using our intellectual property. But they have these proprietary tools and an edge, and then they take that edge, they take those proprietary tools, and they build around it a repeatable, rules-based process. When Dan Russo, our chief market strategist, was a specialist, he was on Wall Street. You better believe that they didn't put him down as a market maker and say, all right, there you go, and not hand him the repeatable process. The other thing that they made sure he did was manage risk. This is the biggest thing I think that Wall Street does that individual folks don't. Wall Street, they manage their risk. Now, they have very complicated ways that some of them manage risk. Hedge funds will short futures against equities. You don't have, listen, managing risk can be as simple as exiting bad positions in trades before they wipe out your portfolio. It can be that simple, but they manage their risk, whether it's just simply exiting the position or buying an option. They manage their risk. Dave, I see your question. This is not going to focus just on option strategies. As an options educator, I firmly believe that the path to repeated success in options is by understanding the underlying equity and then pairing the appropriate option strategy with it. I do that twice a week here in a session for Chaikin Analytics members. By the way, if you ever have any questions, there's a number at the bottom of the screen. You can call them. You want to know more about these option idea sessions that I hold? I'm not really going to talk much more about them. I'll reference a few things here and there. I've got a lot I want to get to. Please, there's a number at the bottom. Call them. Call that number anytime. My colleagues will answer any questions you have. Okay. All right. Back to the pros. What do the institutions know that you don't? They know that models beat humans. They know that a repeated strategy beats humans every time. This is from James O'Shaughnessy. I happen to follow him on Twitter. I happen to follow his father on Twitter. I think that his dad has the best gift game on Twitter. He is a successful inventor and a quantitative analyst. He crunches those big numbers, all that data that overwhelms me to have to look at, that I don't really want to have to look at and try and figure out. All that, they crunch it just like our folks in the back do, just like the employees we have in the back. We have a bunch of quantitative analysts. That's how the power gauge got built, which we'll talk about in a second. So individual investors, they tend to not have a plan, trade on emotion, take a hot tip from a friend. Institutions build themselves reliable proprietary tools, use a repeatable process, and do the same thing over and over and over again, and they manage their risk. And I'll tell you a quick story about how important that is to pros. The idea of a repeatable process and managing your risk. Once, as I was learning from one of my option mentors, again, floor trader at the Chicago Board of Options Exchange, he was standing there, he was teaching a class, and he had maybe half a dozen students. I say students, these are people with significant wealth who are over 50. That's what I mean by students. They're professionals. People who've built up a nest egg and are looking toward retirement. Maybe they want to replace income. And this is who he's talking to, teaching them how to generate income in the market using a repeatable process. And they're asking him a lot about his plan, his methodology, what he does. And he stops and says, guys, this is great you're asking me about what I do. You need to have it matched to what you do. And we do this here at Chaikin. We help you build a plan for you, because that's to match your goals, your time horizons, what you are. Listen, my dad and myself should not have the same approach to the market. We just shouldn't. We're in different places in life. He's retired, has a pension. Most people my age, if you say the word pension, they think that you're speaking French. They don't even know what that is, right? So anyway, he's sitting there and they're peppering with questions. He says, listen, I just want to impress upon you how important it is that you have your own plan for you. If one of you comes to me and says, this is my plan. When UPS drives by, I hit the buy button, whatever's on my screen. I ride it for 5% higher. And if it goes down 2%, I cut my losses. That's it. That's the whole plan. And when UPS drives by, I sell, right? FedEx drives by, I buy. UPS drives by, I hit the short button. I short, it goes down 5%. I cover my short, it goes up 2%, cover my losses. It's that simple. That's my plan. I just look at the trucks that go by. And then I have a very simple up this or down this, and I'm in or out. That's it. I stick to it 100% of the time. He says, student 2 comes to me. No plan, nothing. Says, listen, half the time I do really, really well. The other half the time, not so great. Now, if you asked me which one I would invest in, I would invest in the one with the plan based on whether UPS or FedEx is driving by, because it's repeatable, unemotional, manages risk. And that's it. Will it make a lot of money? No. But will it lose a lot of money? Absolutely not. This other guy, listen, maybe you do really well one day and then you wipe out the whole thing the next day. What am I left with? Nothing. A plan and repeatable process, an unemotional repeatable process, is so important. It's so important. All the pros have it. All the pros do it. Institutions will fire you if you are not following the plan that they taught you to do. One other thing, by the way, on this professional edge is when Dan was on that trading floor, Dan Russo, our chief market strategist, he had mentors. I don't think we talk about that enough. I had mentors. I think it's important. I don't know how many of you out there can pick up the phone and call somebody, literally get them on the phone and get a question about, I'm an options expert, so I take option calls from our members all day. Someone's got a question about theta, the theta curve in a credit vertical. How does that work? Listen, you can go to Google. You can go, there's some places I really like out there that I think have great information, but you can't have a conversation with a website. When Dan was on the trading floor, when I was learning, what our members have access to, mentorship. The ability to ask a pro a question and get a pro answer. All right, so let's talk about what Chaikin Analytics is. Chaikin Analytics is a professional grade tool. It is a quantitative model. It gives you a really simple sort of outcome. It's either very bullish, very bearish, bullish, bearish, neutral. I'm going to get more into that, but we're not overwhelming you with all kinds of gradations. This is likely to outperform or it's not likely to outperform. Now, what goes into making that outcome come out? Because it's a model, it's an algorithm. Mark, using his years on Wall Street, got together with some, again, people I think NASA would be lucky to have, and built a model. And the model takes into account 20 factors. You can see them on the screen here. It takes into account, there are 5 technicals, the rest of it's fundamental. It's mostly a fundamentally driven model. But Wall Street also knows that fundamentals plus the technicals are what give you a winning edge. You can't just use the fundamentals. There's an interesting statistic I heard. The highest percentage, so of all people applying to be a chartered market technician, the highest percentage of those are currently CFAs, people with great fundamental backgrounds. So they realize they need a little bit of technical analysis to help them out when they get a good fundamental story down, to help them get in and out and understand when things are breaking down ahead of the fundamentals maybe. So 20 factors. Some of your financials that you're used to seeing, earning stuff, we have our own view on these, their own weight to them. So the technical section, there's 5 technicals there. The technicals 5 of them is 25%, but the actual technical weighting is only 15% of the whole model. All right, so we have a weighted model that we crunch every night on thousands and thousands of stocks, and then it spits out a rating. It tells us, is this bullish, bearish, neutral, very bullish, very bearish? And this is the returns. Now, this is life to date. The very bullish are likely to very outperform. The bullish are likely to outperform. Neutral is really just a shoulder shrug. Bearish are likely to underperform. The thing is when you separate out the ones that are likely to outperform and the ones that are likely to underperform, you're more or less left with the ones that are likely to perform. And so the neutral ones tend to move with the average stock. They're pretty close. But this is your edge. If you're buying bullish stocks, you immediately have an edge. And if you don't own bearish or very bearish stocks, you immediately have an edge. So the power gauge right there, algorithm crunched down, takes more data than I could possibly do on my own for probably 5 stocks, let alone 5,000, and get some. Now, this is life to date. This has generally been in an up market. So I wanted to actually, I picked out one of the down years. Oops, did I not pick out a down year? Oh, I didn't. Did really well in one of the down years. All right, well, we're quoted by a lot of people. Mindlin is a fundamental analyst. He uses our system. He recognizes that the model that Mark built is impressive. It's how Wall Street works. He's incorporated into his due diligence. Guys like John Carter, who are amazing options traders, he called it an awesome meter. I think that's a pretty good way of saying it. He uses it in his stock selection and timing. And I've gotten feedback. We have a lot of people that are both Carter people and Chaikin analytics people, and they've said to me, "Hey, John pulled up your analytics today." I said, that's great. We know he uses it. We like John. Big fan. JR, I'm sorry you think this is too wordy, but I have a lot of things I want to say. And I think given my experience, there's a lot of people out there that I think need to understand really the importance, and I want to impress it among people, the importance of having the tools and the repeatable process that you need. And Tony, bearish stocks for shorting? Absolutely. When I go and look for bearish opportunities, I want a bearish stock. In fact, we're going to go over a bunch of these. I'm going to go over a bunch of examples. In fact, we're getting into the examples. So hold on, stick with me. We're going to go over a bunch of charts. I'm going to mark them up. I'm going to show you exactly how I go about it. But you have to understand to compete in the market. And if it's not with Chaikin Analytics, that's okay. All right. But to compete in the market, you need a repeatable process and an edge, a directional edge, some sort of directional edge. Right. And you're going to need tools. You're going to need professional level tools to do that. So what do we use? Well, I talked a lot about the power gauge. The next thing I want to talk about is relative strength. Wall Street is judged on relative strength. If a Wall Street analyst makes 20%, but the market goes up 25%, that Wall Street guy did not do well. Conversely, if some fund loses 10%, but the market goes down 20%, that fund did well. They outperformed. They had relative strength. So Mark built, again, he's a guy that builds indicators for a living. Mark built a proprietary relative strength indicator. And we use it along with the power gauge to pick out bullish ideas or bearish ideas. So there's a chart over here on the right. We're going to look at some more of these charts. The relative strength indicator is down here. So we have our power gauge at the bottom. Here's our power gauge rating. And we read charts from the bottom up. And again, we're going to get into more of these. Above it, relative strength. This tells us whether or not something's outperforming or underperforming the market. It's pretty simple. People overcomplicate this, actually, I think, a lot of times. no one wants something that's below average. The S&P is an average. And what this indicator at the bottom there is telling you is whether this stock is above that S&P average or below that S&P average. You don't want to be below the S&P average. You want to be above the S&P average. If you're below the S&P average, you might as well buy the S&P. You would do better. So you want to be in stocks that are outperforming the market. Relative strength stands alone as its own bullish or bearish indicator. That relative strength indicator, I think, is worth the subscription model itself. I think the power gauge is worth it itself, and you get them both together. That is an impressive indicator at the bottom there. It helps you understand whether you're in an above average stock or a below average stock. And no one wants anything below average. There's nothing in life you want that's below average. So this is the kind of setups that we're looking for. Stocks that have bullish power gauge ratings, stocks that are outperforming the market. Right above that, we have an overbought, oversold indicator. I'll get to that in a second. It's another professional grade tool that's proprietary. So these tools at the bottom that you see down here, these three indicators, the power gauge rating, the relative strength, which I have highlighted here, and right above it, this overbought, oversold, they're all proprietary tools that are only available at Chaikin Analytics. Mark built them for our members. We use them in conjunction to understand directionality and then to understand timing into a repeatable process, which I'm going to go through now with a bunch of examples. So we're looking for what we call classic bulls. Again, these are stocks that are bullish, outperforming the market, have good money flow, and are above a rising trend line. This is First Bancorp of Puerto Rico. How many of you a year ago thought that buying the Puerto Rican bank would be a great investment? Well, this is how we read the charts. Again, I talked about the power gauge rating. That's along the bottom. So you see that's been bullish pretty much the entire time. Right above it, the relative strength. So this is a stock that's been outperforming and is likely to continue to outperform. This tells us the power gauge tells us what's likely to happen. The relative strength tells us what is happening. We'll talk about overbought, oversold in a second as a timing indicator. Above it, we have a couple of dotted lines. These are volatility bands. You may be familiar with the Keltner channel or Bollinger bands, things like that. These are, Mark built these. We call them Chaikin volatility bands. They're designed to give you the expected range over the next few weeks. It's great for traders. If you're a swing trader, these are really, again, these bands can really help you. Now, the bands, I like them. You can use other bands. More importantly, are the two at the bottom, the relative strength and the power gauge. They're both bright green, and stock is trading above a rising long-term trend line. This is a 200 double exponential moving average. It's just a long-term trend line. So when I have a stock, and myself and my family, we own this is actually a personal holding. When I find a stock that is bullish and outperforming and above a rising trend line, I then look for it to be oversold and below the middle dotted line. And that's my entry point. You could have invested in the Bank of Puerto Rico or First Bancorp of Puerto Rico back at the beginning of last year, and you would have made a new 52-week high a couple weeks ago. Think about that given the condition of the market. All right, but that's, you need tools that can help give you the confidence and the edge to find stocks like this. I had no idea the stock even existed until it came up on a screen that I ran. Right? There's stocks I don't even know what they do. And until they come up and I look at the Chaikin Analytics platform and I go, wow, this looks really good. This has the odds of going higher consistently. Now, as an investment, once I'm in, as long as these two at the bottom do not turn red, I'm holding it. So I'm in and I've been in and I'm holding it. It turned yellow. That's not great, but I'm not panicking. I have a process. When one of them turns red, that's when we start to look for the exits. All right, back to this overbought, oversold indicator. It's a little wonky on this particular stock, but it's designed to give you overbought and oversold readings in both up and down trends, which is different than an RSI. It's more closer to a MACD. It's proprietary. designed to give you overbought, oversold, whether the stock's actually moving sideways, up, or down. It's going to give you overbought and oversold readings. This is especially helpful for shorter term traders. RSIs won't usually get to an overbought reading in a downtrend. It doesn't give you a lot of opportunities to get in. This can really help you with that timing. Now, how do I use this? If I'm investing, as I mentioned, once I'm in, power gauge, relative strength, we're both green or neither of them are turning red, coasting. All right. For trading though, I want to get in when it's oversold and below that middle dotted line. And then I get out when it's overbought and up near the upper band. And that's the trade. And then I just repeat that process. I get in when it's oversold. And then this didn't even make it to overbought, but guess what? Made it to the upper band. That's the trade. Oversold again. Overbought. Didn't make it to the upper band. It's overbought and it's starting to come down. I just had a whole session on timing with our members. This doesn't look like a huge winner, but guess what? You just had 2 huge winners. They're not all going to be huge winners. What's really most important is you're not going to have a huge loser by going through this process. That is, unless you have one of those rare times where something just gaps down against you overnight by 10%. And if you can find a program out there that can anticipate gaps at 10%, one direction or another, you email that number on the bottom of the screen and you say, hey, Josh, because I want to know what that program is that can help anticipate those kind of gaps. What we're doing is we're making you the house here at Chaikin Analytics. People are walking up to your table. You're the casino. Odds are in your favor. It doesn't mean that you won't ever lose a trade or something won't ever go against you. What it does mean is the odds are in your favor, and over time, consistently, you're going to beat the pants off your competition. And to be honest, I want you to think about your competition as the other people out there like you, right? Because if you're with Chaikin Analytics, you're trading like a pro. You're not trading against the pros. You're trading with the pros. Chaikin Analytics members, they should be thinking that they're trading against non-Chaikin Analytics members and the rest of the retail out there. Chaikin Analytics members are trading along with guys like Mark and Dan. They're using the same tools, same general process. So this is First Bank of Puerto Rico. It's something that I currently own. And I'm holding on to it. I have no reason to sell this right now. I don't see any reason. Here is OFG Bank Corp. I've never heard of them before. It's another bank and thrift, a small bank. Small bank. Never would have found them before. Again, power gauge, green. Relative strength, green. Oversold. Dips into the bottom half of the bands. As an investment, you hold this until something turns red, and then you look for the exits. All right? Nothing really turned red. At most, this blipped flat, and that wouldn't get me out in there. We talk about how you handle these sort of situations at Chaikin Analytics. I don't have time to get into every single detail, but I want to give you a good sense of how this goes on a regular basis. Oversold, overbought. It's barely hit oversold. Overbought. Again, that's another, that's not ideal, but that's a winner. I want winners. Oversold, overbought. Again, small winners are okay. What's not okay is big losers. Big losers are not okay. Big winners are good. They're great. Small losers are good. Small losers are kind of part of the game. It's the cost of doing business. You know, again, back to the casino, when someone hits the quarter slots machine and they have to pay out like $1 million, how many casinos just decide that they're throwing in the towel right then and there? Odds in your favor, play the odds, play the time. And I mean, I do this so often. It's like overbought. There's out of all the examples we've been going through so far, this is the first loser. I must have shown you 6 or 7 overbought, oversold rhythms on these bulls so far. And this is the first one that actually had a loss. All right. So let's move on to another. I got so many of these examples. Here's another one. Here's AES. AES is a stodgy electric company, utility power company. This was one that our chief market strategist, he writes a morning note. He put this out in his morning note the other day. He could put it out back in July or June. In fact, he highlighted that low beta was outperforming way back in July and August, and I'm going to talk about that in a little bit. Right? It's one of the values of having a pro on your team. But again, here you have now back here again. It's yellow. It's neutral. That's not ideal. I'm willing to trade the neutrals. I'm willing to buy them as long, again, relative strength stands alone. But let's just say we waited for it to give us at least a bearish signal, a bullish signal, and outperforming and oversold. And you got in yourself around 13 bucks. It's sitting at 18. A stodgy utility company that gives you something like 40% in 9 months. Pays a yield too. Just tap that right on top. These are the kind of stocks that you should be owning. Again, look at where the stock is right now. Now, I want to think about how many stocks in your portfolio have this chart look and are sitting up at a 52-week high. If you have more stocks like that sitting in your portfolio than not, well, maybe we can help you with shorter term trading. You seem to be able to hold on to some great ones. But if your portfolio isn't full of stocks like this, that's the value of Chaikin Analytics. We can help you find, identify, and stick with these. Stick with them. How do you know this isn't going to turn around? You don't. Nothing's ever perfectly known. But the odds are in your favor. Bullish stock, outperforming above a rising trend line. All of those things suggest that this is a winner and it's going to continue to be a winner. All right, a bunch of questions adding up. Let's tackle a few of these before I move on. I'm not going to talk about stop loss strategies, Philip. We can chat anytime. You know where to reach me, buddy. But it's an important comment, I think, to make that stop losses are things that pros use. They have risk management. Not some of them don't actually necessarily put a hard stop in there, but they have, they manage their risk. Stop loss is one tool to manage risk. Question about declining money flow. We're going to do a session on money flow on Monday for our Chaikin Analytics members on our open forum. We do an open forum once a week. Our chief market strategist actually is on the open forum. You can ask a chartered market technician as a Chaikin Analytics member any question that you want on Mondays, every single Monday. He hangs out with me and we take questions from members. It's open forum, open questions. It's incredibly valuable. There are times, and talk to our members, I'll ask him my own questions on that same session. I don't know everything. Again, I'm like you. I've never been a professional on Wall Street. I'm like Sandy, right? We're lucky to have professionals who can guide us and who've learned from, but we've never been institutional traders. Dan Russo, he has been. You can ask him a question every Monday as a Chaikin Analytics member. The declining money flow would not concern me. You see there's some declining money flow here. I'm not going to get fully into money flow, but generally speaking, this is a bullish look, and a little decline is not going to get me out. All right, your biggest hurdle is how to find stocks to trade from the list in your hot lists. Oh, what hot lists do I trade? So many signal lists. JD, I'll be honest with you. I don't look at the signal list a whole lot. We have signals. So we're going to go through some charts that have buy signals on them or sell signals on them. Here's another one, Medical Properties. It's a real estate company. I've never heard of it again, but it came up on a screen, JD. That's how I found it. And when it comes up on a screen, then I go through them. And again, I have a repeatable process. I grade these. I look at this and I go, what do the characteristics look like? And does this characteristics look better than that characteristic? Sometimes it's really hard to tell the difference between these two. And that's fair. That's why you have people on staff like me. Give us a call. we'll walk you through something like that. Right? Larry, I don't have positions in all these ideas that I'm showing you. I don't currently have a position in AES right now. I do in First Bancorp. But these are stocks that I'd be happy to have. Would you be happy to have these in your portfolio? They're stocks that have come up on my watch list quite a bit. I don't think I've ever owned medical properties, actually. AES, yes. Not OFG, yes to FBP. Honestly, it doesn't matter which ones I've owned or not. The idea is that with Chaikin Analytics, you can quickly find ideas like this and analyze them, have an edge on directionality, understand when to get out, and then repeat that process over and over and over again. I have rules that I've built around my trading with Chaikin Analytics. I won't buy, so this is oversold at the moment, but all the way close to the upper band, I won't buy it up here. I'm happy to buy it at the middle dotted line. So for me, this was the trade. I did not take it. But that anybody who this is actually an idea that Dan Russo put out. So anybody that did take it, I mean, look at that. In nary a week, it's not even overbought yet. I would ride this. If I were in this, I would ride this. You've got more potential property up probably here as it moves higher. So yeah, so I don't use the signal list. I use the screener, and I'm going to share my screen today that I use. How do I search for these stocks using this program? Tony, I'm going to show you my swing trading screen. And yeah, I use overbought, oversold continuously. This is a professional grade oscillator to help you with your timing. That's what it is. And I encourage people to lean on it. Swing trading on a constant basis. I don't sell on a 10% stop loss. You strictly sell on bearish power gauge. Not just strictly bearish power gauge, Steve. Relative strength changes. 10% no. Depending on the position, it might be less than that, honestly. If it's a swing trade, if it's a long-term investment, it might be more than that. You're a beginner at trading. Virginia, welcome. Are there educational videos to learn and read our charts and understand? Yeah, I'll talk about the support that we have. As I said in the beginning, just being handed a professional tool is not enough. You need to understand how to use that professional tool. So we teach that here. We have a great support team, fantastic support team. I'm very happy to work with the colleagues I have. That's AES, medical properties. Again, these are just, this one I wouldn't have touched. So we'll talk about this briefly here. You can see until about here, we were bearish rated. We were underperforming the market. And the price was more or less below a downtrend. And then here we had what we call a character change at Chaikin Analytics. The relative strength went positive. The stock crossed above its long-term trend line, and that trend line started to go positive as well. And the power gauge, it stopped flashing bearish. Eventually, it even went bullish here in September, which was around 15 bucks. It's now up at 18. If you were a little more aggressive and got in at neutral, and frankly, by my rules, I wouldn't have gotten in until here. Longer term investors, maybe they get in just when this character change happens. So we can talk to you about how you use these tools. But it's not terribly complicated. There's a little nuance to it, but you find the bullish stocks that are outperforming, that are oversold, are making higher highs, and you buy those on the dips. And all these pictures that we're looking at here, so all these medical properties, AES, OFG, FBP, I mean, they all have a very similar look to them, don't they? There's not not a ton difference between them, but they all have the same characteristics to them at the bottom of the screen. They all have been bullishly rated and now performing. They've all been generally trading above a rising trend line. And then it's just a matter of getting the timing right. Timing's hard. Timing's very hard. I don't want anybody to think timing's easy. It's a lot easier, though, when you have a really reliable tool. So I use the overbought, oversold indicator. I think it's incredibly valuable tool. All right. I don't just take bullish trades. I take bearish ones as well. Oh, actually, this is another bullish one. This is another example of that turnaround that we're talking about, the character change. This is bearish, most of this chart. It turned bullish in mid-January. The relative strength didn't really change until early February, and it didn't really cross the long-term trend line and that start to rise. So somewhere around here is where it would start to meet my rules. Actually, probably not, closer to here. Now, I don't want to buy right there on that first initial breakout and trend change. So what do I do? And what did I do? Waited for it to pull back, oversold, enter. Now, this one I recently purchased. I am long these shares, and it has gone slightly against me, and that's okay because I have a repeatable process for when I get out, how I manage my risk, and how I'm going to go about trading this. So right now, we're pointing up. I'm going to let it run. We'll see how it does. We could talk about this as a bearish example, but I brought a whole bunch of them. I've been coaching a lot of people. I hear a lot of these stories. I was looking for the one from Ken. I couldn't find the one from Ken. Ken's somebody that I coached. He'll tell you that he's made millions of dollars with Chaikin Analytics. This is one using Chaikin. Now, these are clearly, you're not making 400% without option strategies, but somebody that used option strategies. Now, on the other side, so they just paired Chaikin Analytics equity research with option strategies. The other side of the bullish stocks are bearish stocks. These are ones that you don't want to own in your portfolio at all. You just don't want to have them. On the other side of it, you can trade them to the downside. So we're just looking for the flip. These stocks are going to have a lot of red on them. The ones that we looked before, a lot of green power gauge, green relative strength, a lot of green money flow above a rising trend line. These are going to be the opposites. And again, it's really like flipping around, just red and red. Instead of oversold, I want overbought. I want to see a lot of red money flow. I want to see price below a falling trend line. Here's one of the signals that I mentioned earlier. It came up, but I want to teach people how to fish. We have signals, so we're going to feed you some fish as you learn. JD, I really encourage you. Not all of our signals are appropriate for everything. We have 6 buy and sell signals, 6 pairs of buy and sell signals. They come up for different reasons. They are auto-calculated, and they come up under very specific conditions. Not every condition is going to be suitable for everybody. JD, as a Chaikin Analytics member, I can tell you I like the overbought, oversold buy-sell signal for my swing trading. I like the relative strength breakout, breakdown signal to help me find ideas like AMET that I just showed you. I think it helps find those turnaround candidates pretty early, that buy and sell signal. And I think you can buy those and have confidence on a bit longer of a duration of a hold than maybe the overbought, oversold buy sell signal. In our user guide, we have all the information on them, and we also have a video in our archives, in our open forum archives that I can send you if you email us. Be happy to send you that link. But here, and again, this is just another example of a repeatable strategy over and over and over again. I like going back to the same well over and over again, and I do it until it stops working. So I do these types of trades over and over and over again until they stop working. I have a repeatable process that I do this with. So I take bearish, and overbought, rallies up, hits my middle dotted line there. I like it, got a little bit higher. That's great. I wait till it gets to oversold. This one, it took a while for it to get oversold, and it was more or less flat. In fact, you probably could have rethought about this position right here when it didn't even quite make it to oversold and started to curl up. and just saved yourself some time. And then waited for the next overbought condition. Look at that, one heck of an earnings move. Even if you waited till after earnings, still overbought, still write it down. As it starts to leave oversold. And you do the same thing again, rinse and repeat. Overbought, oversold, overbought, oversold, overbought. We'll see, but so far, I like to bet on the same things happening over and over and over again. And Chaikin is a tool that enables me to do that, right? So I've been handed a tool that allows me to compete with the pros out there, with the hedge funds, right? Because I have a sense of what's outperforming and underperforming, what's likely to outperform and underperform. I have professional tools at my fingertips now. It's powerful. It gives me a lot of confidence when I get in and out of things. And when you have a repeatable process that works over and over again, it helps breed the confidence, and then confidence breeds success. This is Anadarko. Anadarko had a character change back here in August. Everything this direction, bullish trades only. Everything this direction, bearish trades only. Does that make sense? I mean, I've been going through a lot of these, and I do talk fast, so got a lot to say, got a lot of thoughts. But look at the bottom. It's not green, which is not ideal, but it's not red. So then we default up, bright green. We look up, it's above a rising trend line. All right. Now it all kind of flips. It starts turning red at the bottom. Price is now below a falling trend line. Once I've decided that one side that I'm only on the bears now, then it's back to the my timing indicators. Overbought, pings that middle dotted line. Ooh, to be honest with you, I probably would have gotten out here. All right, because it didn't quite get to oversold, and it didn't quite get to the lower band, and I would have been waiting for it to ping that lower band. I still would have been a happy camper. Overbought, oversold. Now you say, Josh, why would you get out here and not way down here? I'll be honest, once it starts to get outside of these bands, I look to reduce my position sizing, especially going into earnings down here. A sharp move like that, I'm at least taking half when we get outside of that band. Now that's my process. Maybe you take it all. That's Sandy's process. There are different ways to handle it. We can have people here who can walk you through that. But again, we just go up and down and we see it's all red and below a falling trend line, and we wait till it's overbought and get in, and we do it again here. That gap up, oh, love it. Gap up in terrible money flow in a stock that's absolutely underperforming. Didn't make it to the lower band. When it doesn't make it to the lower band and this starts to curl up, start to look for the exits. Still a good trade. Wouldn't have gotten into this, didn't get to overbought. Overbought to oversold. Not, you know what, we'll even just call that flat. Still, think about the process here. We just pinged overbought here, pinged the middle band. Starting to, we'll see if it makes it all the way down or not. But I just watch the indicators. The ones that are all red, we play for bears. The ones that are all green, we play for bulls. Things in an uptrend with all green at the bottom, we're bullish on them. We play them on the bull side. All red at the bottom and in the downtrend, we play on the bear side. I don't want to oversimplify, but people overcomplicate trading a ton. They really overcomplicate trading a lot. All right, questions adding up. Let's see if I can knock a few of these out. I got a few more that I want to go through before we wrap it up. Can I search for stocks in this program that are optionable? Well, we are really a firm that looks for directional. We really kick rear end when it comes to directionality, as you can see from the charts. Sideways is tougher. Sideways is tougher, but we do have screening capabilities for that. If you'd like, give my colleagues a call and they can demo the screener for you. I'm going to show a picture of the screener in a minute, Tony, and I'll highlight the area where I would go in on that screen to do that, to find that. When will I reevaluate any stop loss strategy after aim at? Email me, Philip. That relative strength starts going negative, that's for sure. Do I trade mostly options or stocks? I trade mostly options, but I invest in stocks. I also will swing trade stocks as well. If the option trade doesn't look good for implied volatility reasons or just because it's illiquid and I really like the setup, I'm happy to make a 5–10% move in stocks over a couple of weeks. No shame in that game. When placing a short or a put, how far out do I usually go? George, that's a great options-based question, so it depends on your time horizon. If you're looking to ride a trend down for months, then I'm going to buy a lot longer time than if I'm just playing from overbought to oversold. That's a much shorter duration. As an option educator, I always feel compelled to tell people when they buy options, when you take debit strategies, this is a freebie from an option expert, buy more time than you think you need. If you think it's going to take 3 or 4 weeks, buy 6. You're going to help keep yourself away from the worst part of theta. And with the best of intentions, we think things take 3 weeks. You ever been in a trade and you think it's going to take 3 weeks, you get out, and the next day it really takes off? Like, it always seems to move right after. Give yourself an extra 2 weeks. You'll catch it. Does the software provide alerts? So the software has buy and sell signals. They're entry signals, not exit signals. So if you got an oversold buy, you're not going to get an overbought sell corresponding as an exit. However, you will get a good entry signal. So yes, you can go through that. We want to provide, again, we're really a stock research firm. We want to give you an edge in direction out there, and we don't want you to have to rely on signals. There are tons of stocks I trade and do really well in without using the signals. Signals are a good way to help you find ideas, though. Some are appropriate for some people more than others. Again, as I mentioned earlier, different signals have different calculations to them. At Chaikin, we teach you all about that. You want to know more about our signals? Call my colleagues. The white dotted lines. The white dotted lines are volatility bands. They give me a sense of what the likely range is for a stock. Mark is a genius. This guy creates the best indicators. I am so lucky to be able to work for him. He's created these dotted lines. And honestly, I don't want to poo-poo Mark's dotted lines. These indicators at the bottom are professional level. These dotted lines are great, but they're not quite the overbought relative strength and power gauge. They are volatility bands, and they're designed to give you a sense of what the likely range is over the next couple of weeks. And it does a pretty good job. Stocks in strong uptrends will hit the upper band a lot and not the lower band a whole lot. They might, but not a whole lot. Stocks in strong downtrends, conversely, they hit the lower band a bunch and they don't hit the upper band a whole lot. It helps you with timing, because if you are in an uptrend, you can understand that you should not wait. If you want to have good frequency of opportunities, you shouldn't be waiting for the lower band, or conversely, the upper band all the time. In this overbought line here, I might have even gotten in here, just because I don't expect it to hit the upper band a whole lot. And even there, look at that trade, till you get to the outside of the bands. Now you take some heat in there. So depending on what your risk tolerance is, risk management, things like that. How do you find the stocks to put into the model? We crunch numbers on like 4,800 stocks. It's all the stocks listed on a major US exchange with a few exceptions. Like Google has GOOGL and GOOG, and we're only going to provide ratings for one of those. So if they're like preferred shares or things like that, or if there's a class A and class B, like Berkshire A, Berkshire B sort of thing, we rate Berkshire B. So But any stock that's listed on a major U.S. exchange should be in our system. We have a couple of international ones, not all, but we have some international stocks too that are listed on the exchange. It's APC. This is, I don't even know how to pronounce their name. I'm not going to try. VICR is the ticker. And again, I mean, I don't want to totally belabor the point, but you can see this is in a nice uptrend. It doesn't hit the lower band. It hits the upper band a bunch. It's outperforming. There's no red down here. And when the red shows up, we get out. All right? That's it. And now we have a character change. Only bear trades right of that line. And do it when it's overbought. And just over and over again, repeat the process. Rinse and repeat, rinse and repeat. We played, I don't know if I put win in here. We played win, I guess not. Whirlpool, Philip Morris. I mean, these are just all, I'm just trying to remember all the stocks on the bear side that we played in 2018. Adobe, Intuit, Microsoft. These are a bunch of bulls in 2018 that were great repeatable processes. Anyway, one of the things that I think is tough for people to do is get a sense of where the overall market is going. Too often they rely on CNBC because we're smart people and we're successful and we think we can figure it out. And that's not really a fallacy, except there's just so much data out there and the market has such professionals in it that it's tough. And it's tough to just, the news is designed to entertain you. It's designed to explain what's happening in a way that captures your attention, not in a way that actually is true. So one of the things that we have is our chief market strategist writes a morning note. We call it Morning Insights. He puts it out every morning. Back in July, he noted that low volatility started to outperform high beta. High beta was breaking down. That's a risk difference in the market. In September, he noted a change in September, he noted a change in the SPHB versus SPLV. And a few days later, he said, listen, break at this level, further selling, we could really be heading lower and we need to start changing, skewing our positioning to lower volatility, more defensive posture. And that's what he was saying. And had you gone into something like AES, which is a stock that I pulled up on a chart earlier, that's the type of example that we were talking about in September. That low vol is starting to outperform high beta. It's breaking down. It's negative for the market. The market is a risk asset. And when there's less risk thirst, it tends to signal breakdowns. He pointed out a key level and down we went. Now, I don't think he expected it to get all the way to 2350, but our members were made aware that defensive positioning was the way to go. Another good note, a couple questions. So let's try to get to the questions and we're going to wrap this up. I've got one or two more things I want to show you about the platform and then we're going to wrap this up. So just stick with me a few more minutes. Just started trading options. How do you narrow down stocks to trade from the newcomers hot list? Yeah, JD, I use a screener. We're going to get to that in a second. Israel, is it suitable for intraday trading? I'm going to say yes and no. As someone who has intraday traded and has coached intraday traders and been coached by intraday traders, you should be trading with the trend as an intraday trader. And I say that because trades with the trend have higher probabilities of success. There's a reason there's a trend. It means one side is going farther than the other. And an uptrend, moves higher happen more often and in greater amounts than moves lower. So in uptrends, you should be taking intraday bullish trades. As someone who used to coach people on how to trade futures, that's what I would tell you is you need to identify the trend and then you need to trade intraday with the trend. So can we help you with intraday analysis? No. My guess is that you're looking at candlestick charts or something like that for intraday trading anyway. But if you are trading at a significant size and are struggling with intraday trading because you're not getting the larger time frame pictures right, then yeah, we can help you. We certainly can help you with that, because you need to know what the larger picture time frames are for your intraday trading. I'm a huge believer of that. I've watched a lot of people try to day trade against the larger trend and pay a lot of money for that experience. So you need to have a plan. You need to have a disciplined, repeatable approach. We use Chaikin. I've shown you a lot of charts. I kind of started at the end of my process. My process really is every Monday morning to flip on my computer and run a screen. And so Chaikin Analytics members, you can replicate this screen. You can plug this in, you can save it, you can replicate the screen. It returned 18 stocks. You can see along the side here, it tells me how many stocks were left after every line was calculated. I brought 4,400 stocks down to 18 stocks. It took me a couple seconds. This is a screen that I have preloaded. I created it months and months, years maybe ago, saved it, and then I just click this button up here, load it up, hit the get results button at the bottom, and boom, the stocks come up. So if you'd like the stocks and you're Chaikin Analytics member, let me know. Happy to share that list with you. If you sign up tonight and you want to know what 18 stocks came up through my list, I'll email them to you. If you're a new subscriber, you're a new member, you sign up tonight, I'll email them to you. You can go to the right down here and sign up. If you have any questions, you want to talk to one of my colleagues, their number's at the bottom. But I got 18 to come up. Happy to share them with any members. So if you're a current member or joining, then I'd be happy to share this list with you. In fact, I'd be happy to give you all of my screens, honestly. I have a bull screen, a bear screen. If you want to create other screens, I'll work with you on creating screens. Which really gets me sort of to the rest of what I want to talk about, which is a little bit of the support and the other things that go along with Chaikin Analytics. We've talked about the tools. We've talked about the timing tools, the directional tools. What Chaikin has, not just in those tools, is market commentary. So Mark writes a column every week. You get Mark's thoughts every week. Mark Chaikin, the guy who invented Chaikin Money Flow, his indicators are in your platforms right now. When you sign up for any broker, if they have a charting tool, Mark Chaikin has indicators in your charting tool. It just came right along with it. These things can help you build a repeatable process or repeatable approach in a way to consistently be successful in the market. If you're having a problem with timing, if you're having problems with identifying directionality, this is what you need. You know what? There's somebody who asked me about flat stocks. We have a performance metric, and we have a few factors that you can't see here. But between the performance metric and one or two factors is what I would look for, and then I would pull this to neutral. And that's how I would screen for condors, for things that are going sideways, for the person who asked about condors. That these are the things inside of the screener that I would particularly be looking at. A lot of this other stuff is for directionality. We can build non-directional stuff using a couple of the internal factors and the price performance. All right. We also have options. So we have this options feature. It analyzes options ideas for you. It's great for new options traders. I use it in my option ideas sessions. So we have a number of sessions that we do throughout the week. One of them is an options idea session. I go through with our members live twice a week, and we talk about different trading ideas. All right, it's not a live trading room, it's educational only, but if you've ever had an option question and you've been Googling around trying to find the answer, you as a member, you call me and I will just I'll give you an option expert's answer on your option question. If you have a question about a technical indicator, we've got a chartered market technician. Send us the question. You'll get a chartered market technician's answer. It's one of the things that's in the and more down here. That's what you get. And I think the and more is not highlighted enough. So we have this cool options tool to help you find options idea if you're an options trader. We have tons of options support, options education. We have a couple educational videos. We have Ask an Expert. Anytime you have a question, you can just ask an expert. You can pick up your phone, much like I can pick up my phone and call my mentors who are former floor traders. You can pick up your phone and you can call an options expert. You can call a chartered market technician. You can get answers to your questions, and you don't have to go through Google or Investopedia and try and decipher what all that text means. We can have a frank conversation. Anyway, we have a lot of small group tutorials for members. We really, really want people to succeed. I mean, Mark founded this for a reason. He was retired. He didn't need to come out of retirement. The man's made, right? He doesn't need to come out to retirement to do this. He saw a problem. He saw his wife struggling with the crash. He saw all the panic out. He saw the people that were hurt, and he knew he could do something. So he did. It's impressive what he built. And what we do is we help people with it all the time. So on Monday, we have a session in the afternoon, an open forum session. You can ask an expert any question you want. You can do it any other time. You can call us up and we'll get back to you as soon as we can. It's a live session. We'll go over charts with you. We'll go over concepts live on that session. On Tuesdays, we have a pre-market session where we give you a top-down approach. We talk about sectors. We talk about any sector rotation that we're seeing, so you don't get caught off guard by some of the bigger changes out there. That also occurs on Thursday, so we give you a quick update pre-market as well. It's 8:30 a.m. Tuesdays and Thursdays. Also Tuesdays and Thursdays at 11, as I mentioned, I do my option session. It's pretty darn good. In fact, it's fantastic. I think, honestly, if you're an options trader, I'm going to toot my own horn, that option session is worth the price of admission here alone. It is expensive to get legitimate, good education from an options expert out there. It is hard, I know, because I went through it myself, and I watched people who lost thousands in the market only to have to turn around and pay thousands more to learn why they lost thousands in the market. It's a sobering experience. I had one lady named Kathy, who I was coaching. She turned to me and said, Josh, she was retired software engineer, manager, done very well in her life. She retired to Florida, bought herself a home down there, kept the home up north and rented it out very well. She looked at me and said, Josh, if I knew what you knew about options at your age, oh boy, man, I'd have more than one vacation home. It's amazing what you can get with a little bit of education. It goes a long way. No one can ever take it from you either. What you learn is yours forever. And I think the education here is really worth the price of admission. So that's Tuesdays, 11 a.m. On Wednesdays and Fridays, we do an onboard session. So if you sign up tonight, you're going to get a call from myself or one of my colleagues tomorrow, and we're going to ask you to join one of our onboard sessions where we get you up and running with Chaikin Analytics and show you everything, all the tools, where they are, and how to reach us for what you need. You get unlimited coaching and support. I talk to members all the time. You join, you can schedule a 30-minute phone conversation with me. I'm going to ask that you watch an onboard session first, that you get used to the tools a little bit. But then you're an options trader. There's a question here. Timing on Condor exit. That's a great question. If you're a member, I'd love to talk to you about that. Give us a call, sign up, and I'd be happy to answer that question, right? We talk about those things on these sessions all the time. How do you manage an iron condor? What happens if it goes against you? What if it breaks the distal line, your far leg, right? What do you do then? How do you manage that? So these are great questions. You should be closing your condors, not waiting for the last day, that's for sure. This is just another one of my options out there. Is close your options early. Don't wait till expiration. Anyway, you get unlimited coaching and support. Anybody who's a Chaikin Analytics member has heard me say that 20 times already. So unlimited coaching and support. The sessions, by the way, if you can't make them live, they're archived. We save them all for you. They're all archived. So you can go in and you can watch them at your leisure. We have sessions on timing. I did a session on timing today. Just today I did a session on timing. So All right. That's it. Join me. Join Chaikin Analytics. Get professional tools. Get them at a discount. If you have any questions, call my colleagues. All right. 877-978-6257. You can sign up by going to chaikinanalytics.com/profits. Again, we'll get you onto an onboard session tomorrow. And if you can't do it, we'll email you a recording that you can watch at your convenience. After you do that, we have a full team here that's going to help you get up and running, understand you, and help you build your plan so that you can start to have an edge in the market and a repeatable process for success. Whether that's in options or stocks, whether that's long-term or short-term, whether it's long or short. We have people to help you with all of that. We have a tool that helps simplify a very complicated and tough thing to do. You're competing with pros in the market. I mean, Goldman Sachs invests $250,000 in brand new Harvard MBAs in order to teach them how to have a disciplined Goldman Sachs approach. And you know what? There are days they make $100 million in day trading revenues just in a single day. They know that having a repeatable process and an edge pays huge. $17.95, I think, is cheap, frankly. People say it's not. I'll say against what? You probably pay that much in cable every year, and that you might get entertained, but sign up for this and we can help you earn money to pay your cable bill. All right. Thank you, everybody. If you have any questions, call my colleagues, 877-978-6257. They're hanging out with me. They're here to answer any questions you have. I look forward to having you all as members and working with you and having conversations on the phone with you in the future. Have a great night, everybody.